Now speaking, Tom McCallum, Head of Investor Relations. Zoom held an earnings video webinar for the first quarter of FY 24. It was attended by Zoom's founder and CEO, Eric Yuan, and CFO, Kelly Steckelberg. A press release, prepared remarks, financial highlights and a reconciliation of GAAP to non-GAAP financial results were available on the investor relations page at investors.zoom.us. The call discussed Zoom's financial outlook for the second quarter and full fiscal year 2024, potential impacts from the macroeconomic environment, market position, opportunities, go-to-market initiatives. Now speaking, Eric Yuan, Founder and Chief Executive Officer. I closed an acquisition of Workvivo last month, a modern employee communication and engagement platform. Last quarter I shared our strategic focuses and we received support from customers and investors. We unveiled Zoom IQ's new and beta features leveraging generative AI to improve individual and team productivity. We also announced a strategic investment in Anthropic, an AI safety and research company. Major League Baseball expanded their relationship with us by launching a first-of-its-kind partnership using Zoom Contact Center. Virginia Tech added 10,000 Zoom phone seats and 800 Zoom Contact Center seats. Venture Employer Services added 10,000 Zoom phone seats and 800 Zoom Contact Center seats plus Zoom Virtual Agent and Zoom IQ for Sales. My plan manager chose Zoom Contact Center for its total cost of ownership, deep integration with Salesforce, and future roadmap. Now speaking, Kelly Steckelberg, Chief Financial Officer. In Q1 of FY 24, Zoom beat its top line and profitability guidance with total revenue of $1.105 billion, up 3% year-over-year and 5% in constant currency. Non-GAAP gross margin was 80.5%, exceeding the company's long-term target. Online revenue increased slightly sequentially after adjusting for 3 fewer days in the quarter. Zoom Phone surpassed 10% of revenue in the quarter. Enterprise customers grew 9% year-over-year to 215,900, with a trailing 12-month net dollar expansion rate of 112%. Non-GAAP operating income expanded to $422 million, translating to 38.2% non-GAAP operating margin. Non-GAAP diluted earnings per share was $1.16, 13% higher than Q1 of last year. Deferred revenue at the end of the quarter was $1.4 billion, up 3% from a year ago, while RPO totaled approximately $3.5 billion, up 16% year-over-year. Free cash flow was $397 million. FY 24 guidance was raised for revenue of $4.465 billion to $4.485 billion, 2% year-over-year growth or 3% in constant currency. In non-GAAP operating income of $1.63 billion to $1.65 billion, non-GAAP operating margin of 37%, with non-GAAP earnings per share of $4.25 to $4.31. Meta Marshall, Morgan Stanley analyst, inquired, I noted that Eric took back some of the gross margin upside in Q3 to invest in AI. I'm wondering how he is deciding whether to buy or build AI solutions, and where he is leveraging the ecosystem of AI development. Eric Yuan replied, I have been working with AI for a few years. 2 of the largest acquisitions, Savi and Kites, are AI-based. We also have our own AI team and internally developed modules. We announced a federated approach to AI at Enterprise Connect and have doubled down on our partnership with Anthropic. We are looking at how AI can improve our product experience from a customer-centric perspective. Michael Funk, Bank of America Merrill Lynch analyst, inquired, Eric, do you see AI integration in this platform as an enhancement or a separate SKU, and how do you monetize as AI within the platform? Eric Yuan replied, I believe that AI brings many opportunities to Zoom. We have developed large language models, and are using AI to power our feature-rich collaboration portfolio, such as Meeting Summary, the Email Composer, Chat Message and a Zoom Contact Center Virtual Agent. Additionally, we recently launched a workforce management solution in beta, which is powered by AI. With AI, we can not only improve our product experience, but also monetize it with the Zoom IQ for Sales product. Other examples of AI use include Workvivo's employee communication and engagement platform acquisition. Kash Rangan, Goldman Sachs analyst, inquired, Eric, drill deeper into generative AI and how Zoom is uniquely qualified to get productivity scenarios that are very unique and enduring as a source of competitive advantage. This follows the first chapter of UCAS, which successfully provided core capabilities technology. Eric Yuan replied, Zoom has been investing in AI for a few years now, and their Zoom IQ for Sales is based on their own internally developed language models. OpenAI, Google, and Facebook are all utilizing their own models, but Zoom believes that it is important to leverage these modules and fine-tune them with their proprietary data. This can help deliver a unique experience to customers. Leveraging Zoom's data from past meetings can help fine-tune the AI model and empower AI to deliver a differentiated experience. Tom Blakey, KeyBanc Capital Markets analyst, inquired what about a competitor's news that Microsoft may need to create a separate SKU for their Teams product, and how Zoom's vision of becoming the communications operating system for large enterprises might be impacted by this. Kelly mentioned that the online business stabilized, and there is an implied guide for the enterprise businesses to decel into the second half. I wanted to understand the importance of the collaboration component to Zoom's product. Kelly Steckelberg replied, I discussed earlier in the quarter that the adjustment we are seeing is likely due to internal distraction caused by reorganization, rather than competition. We have now implemented a strong sales organization with Graham as Chief Sales Officer and Wendy leading the online team. This has allowed us to make difficult decisions to refocus for success over the Parker Lane, Stifel Financial Corp analyst, inquired I wanted to know how much contract durations compressed in the quarter and if there was a difference between product sets. Kelly Steckelberg replied I made sure to be thoughtful with every buying decision across our direct segment of the business. We expect this not to be a long-term issue, but have updated our guidance for the upcoming quarter to reflect possible deferred revenue. Peter Levine, Evercore IC analyst, inquired Eric, have you seen an increase in the adoption of AI in phone and video contact centers? Is this where we will continue to see the most growth? Eric Yuan replied I am leveraging Anthropic Investment, a contact center, virtual agent, core meeting platform, team chat solution, email candidate and generative AI to improve experiences across the portfolio. Last year at Enterprise Connect, we announced collaboration with OpenAI and internally have an AI team that understands large language models. We are taking a holistic approach and federated approach to AI to understand, fine-tune and monetize features. Rishi Jaluria, RBC Capital Markets analyst, inquired Eric has discussed great opportunities to use AI in various ways, such as adding AI tools on top of videos for video interviews and providing real-time signals. Are you exploring the potential to verticalize these solutions to make direct monetization easier, while still maintaining the value proposition? Eric Yuan replied I recently downloaded the OpenAI mobile iOS app and asked ChatGPT about vertical industry opportunities. It identified two main areas, departmental use cases, such as Zoom IQ for sales, contact center, for support departments, HR, and marketing, and vertical industry use cases, like healthcare telemedicine and law firms. Zoom is number one in telemedicine and AI models can be fine-tuned with customer proprietary data. OpenAI has invested in this area for a few years and will continue to do so. Catherine Trebenick, Rosenblatt Securities analyst, inquired over the last 2 years, having seen a shift from working from home to returning to the office. Has this impacted opportunities for marketing products by introducing new platforms such as Zoom Room and ensuring everyone has an equal viewing experience? Eric Yuan replied the usage of consumer-centric video content decreased during the COVID, but enterprise customers have started to leverage it more and more for hybrid work. Companies such as WorkVivo and Confluent are developing features to support hybrid work, like Smart Gallery View and 3 cameras. CEOs have expressed a desire for employees to come back to an office environment 5 days a week, but this is becoming increasingly difficult due to the fashion of being able to work anywhere. Zoom has the potential to play a much bigger role in supporting hybrid work. Matt Stotler, William Blair & Company analyst, inquired I recently received an update on the contact center product suite and noticed that there was still some honing needed to go to the market. I wanted to get an update on overall adoption of the product suite, as well as what are the keys to driving further adoption going forward. Kelly Steckelberg replied Scott Brown has joined our team as the contact center leader. We are focusing on a go-to-market strategy, similar to Zoom Phone. To support our account executives, we are in the process of hiring additional contact center specialists. We have already approved more representatives and are investing in this endeavor. William Power, Robert W. Baird & Company analyst, inquired what about the segment stabilization, particularly regarding price increases and forward outlook for online. I wanted to know what gave them the confidence that churn and top of funnel would stabilize. Kelly Steckelberg replied we have seen a very positive reaction to our price increase, with higher than expected retention rates. Our online buy flow and initiatives such as additional payment currencies and types have also been well received. We have also seen improvement in the cancellation flow, which is contributing to the improved retention rates. Churn was 3.1 in Q3, 3.4 in Q4, and back to 3.1 again in Q1. We expect Q2 and Q4 to be seasonally higher due to holidays and customer flexibility. Eric Yuan added what Kelly cited about upsell opportunities for the online segment. For example, customers who have already paid for services like Calendly can now opt for Zoom Schedule as a part of their package, representing an upsell opportunity. Siddhi Panigrahi, Mizuho Securities Analyst, inquired Eric about the WorkVivo acquisition. Is this a long-term opportunity or something to cross-sell in the near term? Also inquired what verticals/segments would have the most traction and what kind of revenue opportunity this could provide. Eric Yuan replied, that's why we are introducing this. We are introducing a unified communication and collaboration platform which customers can live in to help solve the problem of finding messages sent through emails or chats in public channels. Customers also want to share video messages with their entire employee base or department news. We believe our WorkVivo platform will generate meaningful data which can be used to leverage AI in the long run. George Iwanik, Oppenheimer & Company Analyst, inquired based on the online side stabilization. I am asking what the expectation of enterprise expansion rate is over the next few quarters. Kelly Steckelberg replied the enterprise growth rate is currently at 112%, which has the potential to decrease until it begins to reaccelerate in the second half of this year. This will result in a net dollar expansion rate lagging behind. Alex Sukin, Wolf Research Analyst, are you planning to monetize generative AI functionality in the product by upselling, cross-selling, launching new products or recognizing later revenue? The rate of decel from mid-20s last year to just over 5% in the second quarter suggests that there must be a way to reaccelerate back to double-digit growth in order to provide the stock with more valuation velocity? Eric Yuan replied, we can monetize generative AI, specifically by targeting the sales department using Zoom IQ for sales. This technology was popular before the rise of generative AI and includes features such as live translation and a paywall feature. Additionally, customers who deploy Zoom One will have access to additional features such as meeting summaries which can be used to monetize for our SMB customers. Kelly Steckelberg replied we expected some disruption in Q1 due to the sales team reduction and reorganization. We are pleased with the new structure of the sales organization and have committed to adding reps for the contact center team. We recently hired Frederick, a leader in Europe, which we haven't had before. We are now well positioned to execute for the rest of the year and rallying behind the sales team to support. Michael Turin, Wells Fargo Securities Analyst. Kelly reported that billings deferred revenue came in a few percentage points ahead of what was expected for Q1. She also mentioned there were some duration impacts. Kelly, can you help quantify the duration impacts for Q1 and Q2, as well as provide insight into seasonality, renewal period, and sales transition impacts? Kelly Steckelberg replied I expect the billing duration impact from macroeconomic uncertainty to be short-term. We've seen customers return before and anticipate more long-term commitments with our bundles, Zoom One, Contact Center, Zoom Phone. Enterprise sales have stabilized earlier than expected and guidance anticipates further initiatives from the online team and restabilization of direct sales org. Ryan McWilliams, Barclays Analyst. Zoom Phone has achieved 10% of sales and 5 million phone seats in a few years, indicating significant success. Kelly, what about any differences in the macro impact for online and enterprise segments, as well as any changes at renewal on the enterprise side in terms of churn from enterprise logos? Kelly Steckelberg replied renewals in Q1 were in line with expectations. Online strength is increasing the top of the funnel, especially in annual plans due to the price increase not applying to annual plans, which increases customer commitment and lifetime value. Eric Yuan replied, Anthropic, we have partnered with a great team and are looking to double down on this partnership. We discussed internally that we are in the middle of raising another round of financing, which is why we hope to solidify the partnership. This will further empower our content and offering and be applied to our entire product portfolio. We are investing so that our federated approach to AI can be further empowered. Matnik Nam, Deutsche Bank Analyst, inquired I have two questions about cash flow. For accounts receivable, the average drag on cash flow over the last 2 years was 80 million, but this quarter it was only 29 million. Also about a legal settlement and asked for a quantification of the costs and an estimated timeline. Kelly Steckelberg replied we updated our expected settlement payment timeline to be either the second or third quarter of this year. Our team has seen an improvement in collections which has been aided by the growth of online payments via credit card, which have a DSO of approximately 3 days. Matnik Nam, Deutsche Bank Analyst, inquired the legal settlement for an amount of $500,000 on March 15. Kelly Steckelberg replied, I had previously provided guidance that there would be a difference of $X. No other changes to the cash flow outlook for our company have occurred other than the potential net legal settlement. Shibli Sirafi, FBN Securities Analyst, inquired for Q2, is guidance a 6% enterprise growth rate and 3 to 4% in the back half? Have changes to sales forecast been made this year? Looking ahead, can we anticipate either double-digit or upper single-digit growth rates in both online and enterprise business? Online growth is stabilizing at 480 for the next few quarters before transitioning to a growth business? Kelly Steckelberg replied, and continuing that into FY 25. We are investing to increase both our online and direct business revenue through innovation, expanding our platform, and investing in go-to-market teams such as the contact center and marketing. We aim to see a reacceleration of growth towards the end of FY 24 and into FY 25. Shibli Sirafi, FBN Securities Analyst, are you targeting an enterprise growth rate of either upper single digits or low double digits? Kelly Steckelberg replied, I am not ready to provide specifics at this time. However, we will be better prepared to discuss this topic in the later part of this year. Carl Kierstead, UBS Analyst, inquired. Kelly discussed the potential to invest to drive growth next year with an aim of achieving high 30s or 40% margins. This could potentially shift the growth margin trade-off. Additionally, if WorkVivo had any impact on guidance for the current year. Kelly Steckelberg replied, we have a long-term operating margin target which is much lower than our current level, allowing us to invest more when opportunities arise. We are focusing on driving top-line growth and taking market share while still maintaining profitability. Margins are currently at their peak, but we remain committed to striking a balance between growth and profitability. The acquisition of the WorkVivo team has had minimal impact on both the figures. Sterling Audi, MoffettNathanson Analyst, inquired. We analysts have been expecting enterprise revenue to be approximately $480 million a quarter, based on our mix models. However, it appears that the actual revenue is significantly lower than expected. This could be due to disruption or something else having a greater impact? Kelly Steckelberg replied, online sales have stabilized more quickly than expected and the overall mix for the year is different than anticipated. In Q1, there was a reduction in staff, reorganization of the company, and changes to incentives and comp plans, which caused some distraction from direct sales. Now that these changes are behind the company, everyone is working to support the direct sales organization and regain momentum. Eric Yuan replied, I want to express my appreciation for everyone's time and support. Thank you all, and I look forward to our next meeting.